Hey guys, we're live here on my back porch here doing a quick video on mortgage protection and annuity sales here. And I'll just text a few people to come on board here so I make sure that I get everybody in. We've got these people that want to come on this, and definitely want me to get them on board. So what I'm going to talk about today is mortgage protection sales, the annuity sales portion of the puzzle, and making sure that you guys understand that you can pull $10,000 to $50,000 to $100,000 a week doing these annuity sales. You just need to learn how to find them inside the house. And once you do that, it's just the presentation is all you need to get to after that. So it's a pretty simple process, and I'm going to show you how it's done. So let me get started here. Let me get a couple pens out of my pocket. Excuse me, I'm roughing it today. The house is filled with people, and I got to do it outside. So when we're doing mortgage protection sales leads to the annuities. I'm going to make this quick and easy for you to understand. When you're confronting somebody that wants to discuss mortgage protection with you, when you get to know them and understand how to get to this portion of the puzzle, this annuity stuff just comes out and it flattens itself out on the table for you to get what you need to present them the opportunity to even use the annuity to pay for their mortgage protection, not out of pocket. So it's a simple process that we use here in my organization that helps many people make a lot more money than just selling a mortgage protection product. Now here's key too. Imagine getting the annuity to sell for the mortgage protection. So not only does it not come out of pocket for the individual that you're protecting with the mortgage protection, because they're using the annuity interest to pay the monthly premiums for the mortgage protection, but you get two sales. You get the mortgage protection sale and you get the annuity sale. So that's key to know how to do that. But interesting enough, what you need to learn how to do is get the information out of people. When I tell you that, this pen sucks, hold on one second. When I tell you that I draw this out, let's act like this is a sheet of paper inside the house, okay? And you come on board, you get Mr. and Mrs. Jones. You have Mr. Jones here, Mrs. Jones here. And in my territory, here's the issue that many of you may be confronting. You are going to run into people that are retirees, and that's where most of my money is pulled. Now, living in a territory in Florida where I basically work with all retirees most of the time, 9 times out of 10, I'm like working with people that are 65 and above in my area. But if you're working with people that are 55 or 40 years of age, you're going to learn how to do the index universal life products, which I use a lot for mortgage protection too. That or the return of premium product is fine. But you want to learn how to get to the annuity. So this is how. If you ask them, Mr. and Mrs. Jones, out of the two of you, who earns the two of the higher Social Securities? That one simple question allows you to know what the monthly income is to a certain extent. So Mr. Jones does. He's got $3,000 a month coming in. And these are usually scenarios I run into when I'm putting this up on the map. So they have a mortgage that's $200,000. They have an income. Now she has $750 coming in. Now, Mr. and Mrs. Jones, I want you to realize something, that this is going to take 6 to 12 months for Mrs. Jones to receive this $3,000. So now there's a void in time. Now we can use our mortgage protection strategies to protect that void in time, which is buying them time for Mrs. Jones to get this $3,000, because all she's going to be living on is this $750 for the 6 to 12 months. Now, sometimes Social Security does pay immediately, but you are supposed to be the worst case scenario inside these homes. If you don't be the worst case scenario inside the home, you're not protecting people properly. So be the worst case scenario. You got $3,000 coming in on Mr. Jones. You got $750 on her behalf. This is what she lives on for 6 to 12 months. Mr. Jones, aside from this, listen to these words. What else will Mrs. Jones inherit? You see, I didn't ask him if he has an annuity. I am asking him what he's leaving behind to protect his wife. And that's a different mentality he has. So I'm not prying into his financial business. I used to do that back in the day, and that never worked, that strategy. So if I said something like, Mr. Jones, how much is in your 401k? It doesn't work, guys. Trust me. If you say, besides the $3,000 that you're going to be leaving behind, what else are you leaving behind, such as stock-based products, a 401k, a 403b? Do you have anything else you're leaving behind aside from the $3,000 that you'll receive in 6 to 12 months? Yes, I have a 401k. Now, interestingly enough, I just ran into two this week. I ran into 1.2 million and I ran into 990,000. This one's good with a stockbroker. I can stop that. But I run into these 5 to 10 times a week, guys, using this strategy, okay? So I'm going to work with this guy here, and I see him next week. What is my job to do? I want to immediately give him an illustration. So how do you do that? This is the language I use. Mr. and Mrs. Jones. Mr. and Mrs. Jones, I'd like to put all of your options on the table, okay? I know I'm here for mortgage protection, but I have a few options for mortgage protection. It's just not like one route you can take, but I have a great option. And this option will not be out of pocket. There'll be no expense to this particular option. So I'd like to show you that option first. Do you have a computer that I can use? And do you does it come with a printer? These two questions will get this illustration in front of this individual instantly. Now listen how cool this is. This guy, when I look, he showed me what he's earning over the years. So his stockbroker's charging him 3% in fees, okay? He's at the belief that he's earning 6%. Now, if I subtract what this guy's taking annually compared to what he's earning annually, this gentleman's only earning 3% interest on his stock-based products. So he's not earning, he's not substantially earning like the way we can teach him how to earn with the products that we use. How do we know what our products are capable of doing? Well, they have a look-back period. So if you take a 10-year look back on most of these products, when he takes his 990,000, they're going to add 10% bonus onto it. So he's going to start with a $90,000 bonus to this product. It lifts him above $1 million. So he starts out at $1 million. Guess what? I forgot. This is $100,000, by the way. He owes $100,000 that he wanted to give his son some money to open up a bar. Okay, so he refinanced, he got this money out. Long story short, he owes $100 grand. Here's his $100,000 for free, no charge. He's got $100,000. His stockbroker can't do this. He'll never get $90,000 in a year. Then how about this? Let's add about 8% interest onto this for the next year. And let's roughly say he's got $80,000 extra. So what's he have? $170,000, $180,000 this guy will earn in 1 year. There's no way his stockbroker's going to be able to touch that. So the look back on this is going to be something like this. It's going to look about $2.3 million in roughly 9 to 10 years, okay? Even with him taking yearly draws of $33,000. Now, I don't want to confuse you guys too much on this, but if he takes this $33,000 in one lump sum with his IRA or his 401k distribution, he's got to pay taxes on this lump sum. If he takes it with the indexed annuity on a monthly withdrawal basis, he only has to pay taxes on the smaller number. So what's the number here? It's like $2,500 a month. He pays taxes on this, not the big number, saving him thousands of dollars in tax finances over the years to come. So you're teaching your clients how to save money, pay off debts free, and then add the mortgage protection into this for about $200 some a month. And that's an extra, what for me is an extra something like $3,000 income, plus what I'll earn off of this, which is substantial $70,000, $80,000, $90,000. So there's another $100,000 week done. You understand what I'm saying? You guys can run into this too if you use the strategies. Now, beyond getting this information out, you'd also want to know what they have in place as a form of, life insurance and things like that, because you can use this life insurance, take the cash value, dump it into this. In this situation, he has a life insurance policy, but we can't beat the premiums due to the fact that he has some illnesses. So for clients that have, Alyssa, turn the fans on. Hey, turn the fans on. Turn these fans on. Fans. So for an illustration on individuals that have issues, health issues and things like that, this is a great way to do it, because this doesn't come out of pocket, first of all. Second of all, it doubles every 10 years by a 20, 30-year look back on most of these products. Third of all, the distributions and taxes is less, and then it becomes life insurance as a distribution for the payout and a death benefit. So it's a great product. Now listen to what I told him we do. His son's going to get all this money. So let's say he dies in 10 years. and it's at 2.3 million. 2 million, 2.3 million. Let's say he's going to use $300,000 of it. So what? It's at $2 million. He gets 300 grand for the next 10 years for free. Plus he built $2 million. So his son inherits the $2 million. Here's the next strategy you do. You take that and you understand this is a future business that you would roll in. Sometimes this guy may pass away earlier, so you're able to take the death benefit from this, add another 10% onto it, and get the son a sale too. Okay, so you don't want this guy to die soon. You know, you got to wait the periods out because it'll be a chargeback on this. So hopefully he lives a good distance of time. What we need to do also is find out what they have other than this. Now, the products that you want to use for mortgage protection, I got to blow up my screen a little bit so I can see myself, guys. And let me show you something else. This sheet of paper, I don't know if you guys can see this, helps people truly understand what they're going to be left with. Okay? This is a monthly bill schedule of what people usually pay in bill schedules. It doesn't even have the Visa or credit cards on here, but this is usually what people are left with. And down here, you can write their income monthly, her income, subtracted to, and whatever's left over each month is what they have. Does the life insurance have cash value? You want to know to ask those questions. Do they have term products? Things like that. These are all the values that you as a life insurance mortgage protection specialist bring to the table. Myron Kaminsky, hello, buddy. Oh my God, I said, what's up? So if you guys have any questions, put them in the quote box and I can answer them. So in a long-term sale, all I would do is this. I would ask for the Social Security. I want to know what his income is. I want to know what her income is, and I want to add it up. In this case, we're talking about $3,750 a month. If they have 900, this guy was a writer or something for movies. And fortunately enough, he was able to put a lot more than this away, but the stockbroker changed it up. He chewed his money away. The fees alone, let me tell you something about this. If you truly show people the fees and be smart about this, let's take his fees. Let's take 3%. Let's say out of this, he's getting $30,000 a year out of his money, okay, every year. Over a 10-year period, that's $300,000 that this stockbroker earns doing completely nothing, letting it ride, picking a few bits, you know. He really doesn't do much work for this kind of style of business because it's such a low amount of money. These guys work harder for the bigger numbers. So what you want to do is show them no downside. You want to show them all downside protection and all upside interest earnings. So what that means is this. This guy's only going to participate in the upsides of the market, period. He's never going to participate in the downsides of the market. Okay, with that level income that they have, they need to be protecting this money. So if he's at $990,000 here and the market drops and he goes to $870,000, he does not have well, that's a large sum. Let's say that he goes down to $960,000. That's a $30,000 difference. I mean, it's going to take a few years to get that 30 grand back. In our situation, the stockbroker is basically using some similarities to this product to gain momentum with the money being earned, but not exactly the same as the distributions of the income earnings are a little different through the life insurance business, but similar strategies can be used in some variable situations. But this is all indexed. You know, you want to provide them with the index. So even if you run into indexed annuities, you've got to protect people from the downside market potential that they will face with variable annuities. So remember, you can take an annuity and turn it into an indexed annuity. But always remember to teach these people you only participate in the upsides of the market. Okay, number one, you never participate in the downsides. What does that mean? That means when your $990,000 gets a bonus, remember the bonus is huge. I mean, the bonus is huge. What is $90,000 on this? 1,000, 0, 18, it's 10. That takes him to what? $1,080,000, something like that overnight. And then you add the 8% onto it. So he's at $1,160,000 in 1 year. And then from there, it just keeps double. It doubles basically in a 10-year period. Is what the strategy in the look back is. So this strategy works every single time. I just don't know how. If I don't have questions coming in, sometimes I do with the webinar. It's a little more open than this. But I wanted to do a quick video that shows you how to pull $100,000, $10,000, $50,000 a week extra And you guys are sitting right in front of it. You're just not asking the simple questions like, who of the two of you has the two of the higher Social Securities? You want to know what the income is. Let me take the annuity out of the situation. Let's just sell mortgage protection for a second, and then we'll end this video. If I sell mortgage protection, I know he has $3,000. I know she has $750. I know that's $3,750 a month. I ask him a simple question right up front. At the end of the month, when you two have your fund money and you pay all your bills, you do this. You show them this. You do this, okay? At the end of the month, when you're done paying fund money and you paid all your bills, do you have between $500 and $1,000, or which one are you closer to? And whatever they choose is what you get to work from. Now, if they have life insurance already, you can check to see what style of life insurance they have or product that they have. If they have index universal life and it's old, you know that the cost of insurance is going to wipe it out. If they have a term product, you know that it terms out eventually. You want to change it up. If they're healthy, you take the premiums from those policies, you put them in one big pile. Let's say they have 1, 2, 3 policies. One's a term, one's an index universal life, one's a whole life. Take those 3 premiums and bunch them up into one big premium and sell the hell out of a big policy, okay? You can use what they have on the table already. Here's the added addition. These two have the index universal life and whole life have cash value. You're going to cash it in. They have cash value. Cash that bad boy in for them. They got 20, 30 grand in their pocket. You can turn that into an annuity too. Maybe they want to pay their bills off. Maybe they want to start paying the mortgage off a little more with that money. Maybe they want to pay for their new life insurance products using their cash value and just reinvesting it back into another product. So there's many strategies that you guys can use. If you have any questions, please put them in the quote box so I can answer. Let me see if there's any questions here. Myron, you got any questions, buddy? I talked to my old man the other day. He's a funny dude, man. My dad's he's a real champ, man. He's always in a good mood. He's a great guy. He's got his own body shop, customizes hot rods down in Pittsburgh, Pennsylvania. Here I am sweating my rear end off in Florida, doing sales for you guys here. When you say old IUL, how old are we talking? That's a good question. An old index universal life, the cost of insurance usually starts immediately. So really, I should have said old, because you can learn about the cost of insurance increases from day one. So how about, let's take it from a simple one. Let's say it's 5 years old. Let's say we have one that's 5 years old. We have an IUL. What it has is it has cost of insurance, COI, built up into it. So what that means, guys, is that is chewing away at the cash value. So let's say it starts out year one at $10. And usually it goes up by $10 a year. That's what I've noticed. Some of them are going to be $3, $5, $10. But when you call, you literally have to get on the phone with the company on speakerphone to let the client hear what this situation is. And that's what I do, is I let them hear how bad that company is, or the scenario that they're putting in is bad because they're going to run out of money. So depending on how much money they're putting in too, if this guy's putting $100 a month in and the cost of insurance is $10, it may take a while for the cost of insurance to deplete this, but it may be in 20, 30 years. It depends on the age of the individual. However, we might not like the scenario of them taking money out, you know? So that's the scenario, but here's the best part. Here's the good one. The best IULs to twist into it, I don't want to use the word twist, to exchange for a better product so they don't run into the cost of insurance issue is this, is if it's like 20 years old or 30 years old, the cost of insurance is very high. It's usually $80 to $200 a month. And that would mean this, is if this guy has $3,000 left in his cash value bucket, okay? Because this thing's been chewing away at it. This is going towards fees. The premium's going towards fees, it's going toward cost of insurance, and it's going towards the insurance itself. So he's got $3,000 left in here. Let's say it's $100 a month is the cost of insurance. It goes up by $10 every year. So next year it'll be $110, $120, $130. The long story short is you can do the math. If it's $100 a month is the cost of insurance, the company tells you, you can tell this guy he has about 2.5 years left for this product to stay in place. Subtract, add this is $1,200 a month or a year, times that by 3, plus it goes up. That's $3,600 in the next 3 years So he'll be done in about 2.5 years, like I said. He'll lose this policy in about 2.5 years. You guys got to run into these, ask what they have in place. And the secret of this is to find multiple policies that you can intertwine and use the premium as one. The old and the new. The old and the new. What's the difference between them now? Robert, I'm not getting that, buddy. I need more information. What's the difference between them now and the old and the new? I don't understand what that means, boss. The old, I'm trying to figure it out. The old and the new. The old and the new. Give me more information, boss, if you can. Type some more information in this. Kevin Williams, what's up, brother? How you doing, man? Heather Gray's in the house. Oh my God, look at this. All these top salesmen. Mark Jones, that's good stuff. All right, I'll leave the rest of you alone. Look, here's the bottom line. I've taught myself how to earn $10,000, $50,000, $100,000 a week by doing annuity products. I do more annuities than most people do in their entire career in a week, sometimes a month. You know what I'm saying? I can find them. It's like selling, to me, it's like selling final expense or mortgage protection, because that's what I'm on the hunt for, is getting into the home and really finding these annuity products. Now, I don't want to take away you from earning a residual income by selling final expense or mortgage protection either. It's very important that you learn to do both and intertwine them. You know what I'm saying? You must learn how to sell mortgage protection. So the simplest way to sell mortgage protection would be based on two products. You can use the ROP term for like 50, 55-ish is the best opportunity. You can use just term, term out the mortgage distance for younger people. You can teach younger people how to use an index universal life, like F&G's, like an 8% on the cash value interest earning on the illustration. So that's proof that's performance proof. That's like they're showing you the history of what it's done. So you can rely on that possibly into the future too. And it's something that you all need to learn to invest in too. You need to get yourself your own index universal life. You need to learn how to overfund it, contact the carriers and learn how to do this stuff. That part of the puzzle you need to get with them on. Okay, if you want to learn how to write the apps, get with them on that. If you're in the home and you've never written an index universal life policy and you're in front of the client, just call the carrier and walk them through it. Just tell the client that it's a new app and you never written this app before. So at the end of the day, here's the simplicity behind this: is you will make more money if you start just finding the index annuities. The challenge I give to you this week and within the next few weeks is to find anywhere from 5 to 10 annuities within this month, okay? If you can find anywhere between 5 and 10 annuities and just sell one, then you're gonna earn between roughly $5, $10, $15, $20, $30,000. It depends on the size of the annuity that you sell. So they are in the homes that you guys are in. Of course, they're not in every home, but they are in the homes that you guys are in. Living benefits. Yes, very important to bring to the table. That's very, very important, Lawrence. Here's what we want to sell on, guys, is the number one thing that people don't do today as mortgage protection producers is bring value. This word is so important. Look, you have to imagine yourself maybe as a car salesman or selling a home, walking somebody through the house, showing them the living room, the bathroom, the tile on the walls, the spigots, showing them a vision of how their family will react inside this house. It's the same thing with these products. Show them how their family is going to react without this product in place. Show them factual numbers of what the mortgage looks like in years. And another important word that you all need to learn is equity. Because 9 times out of 10, you are going to be protecting that and not paying homes off. In most situations, you're going to be protecting the equity and not paying homes off. Now, your upline doesn't want to tell you, they want to keep this stuff simple so you make money for them and the residual income comes into them. But if you want to make big dollar signs for yourself, you need to learn this stuff. You can do it, trust me. I had no idea many, many years ago, many, many moons ago, that I would be capable of doing this. But due to the fact I'm ambitious, I just go after it, guys. You've got to be strong. You've got to be tough. Do not let these clients or prospects push you around. Be tough in the home. Be smart in the home and be smarter than them. If you have more knowledge than the prospecting client, you're going to win every day, every time, okay? So what you need to do is bring value to the table and know the word equity. Why do you need to, does anybody know why we need to know the word equity? You know why you need to know the word equity and teach them the word equity is because that's 9 times out of 10 what they're going to walk away with. Unless the individual makes the timeline of most mortgages of 30 years, 20 years, 10 years, somebody dies on the 20th year, okay? Remember the Social Security situation. He's got $3,000, she's got $750. She won't get that $3,000 for 6 to 12 months. Guess what? If she can't pay that $1,000 a month mortgage, or $1,500 a month mortgage, with her $750 a month, she's out of that house. But what you can do is you can buy them enough time to sell this damn thing and get the equity up. And you can provide them with the equity information that they should see. So if you take $1,000 a month, which is the mortgage payment, you multiply it by 12 months in a year, that comes from $12,000, right? So if you take that $12,000 and you multiply it by 20 years, what is that? 10 years is 120, that's $240,000. And then you divide that by 2. That's how you got to do this. I know it's a long presentation for this, but $1,000 a month is the mortgage, okay? You multiply it by 12 months. That equals $12,000. I'm telling you right now, this is important. You show them what the equity will be at the timeline. You get $240,000, you divide that by 2, that's $120,000 is the equity. Now with inflation on homes and interest being earned, this could be $150,000. This is their inheritance. That's your job. That's the job. That's equity. That's what you need to start protecting. And I know a lot of people aren't going to want to hear the fact that they have to leave. So one of the first questions you need to ask is, Mr. and Mrs. Jones, would you even live in this home? Mrs. Jones, would you stay in this home if he was no longer here, or would you sell it? And a lot of times you may hear that they wouldn't stay. It may be too big for them. It might be too much to handle in their older years, you know? So right there, you know your job is to get them the equity in the home. Now, if they're a younger couple, they may want to protect the back end of the house, but you can get them huge return of premium term products or IULs, guys, you know? So at the end of the day, you got $150,000 on the table there. That's what she's walking away with at 20 years. And what your job to do is this. You want to buy her time. She has $750 coming in for 6 months, maybe 12 months, worst case scenario. You're buying a $25,000 policy, it's affordable now. Remember, for these individuals only have $500 a month left over. How do you know that? How do you know they only have $500 a month left over? Yeah, you asked. So you asked how much after you're done paying all your bills, after you're done paying all this off every single month of your life, and your play money, throw in the play money, how much is left over? In between $500 and $1,000. Which one are you closer to? I'm closer to 500. So let me ask you a question. All your bills are paid off. So if I were to tell you all your bills are paid off, you'll be able to have the $150,000 guaranteed, and you only had $300 extra a month to live on. Could you live that way? All your bills are paid, you played with play money, and you have $300 a month left over. They always say yes. Okay, here's your product. Now you have a $200 premium to work from. Boom. $200 premium, guys. For most of you, that's about $2,400 in income, one house. Okay, you do 10 of those a week. 10 of those a week. What's that number? Now you know what that number is. You know what that number is. That's how you get big numbers. Now, back to the beginning. How does all this begin? How do we start all this? How does it all begin? It all starts with this word here, leads. How often do you get leads to be a big producer, to be an awesome producer, to be a $10,000, $20,000 a week producer? How often do you need this? Who the hell told you you were able to start a business for free? Did you think for 1 second you were going to be able to get into this industry and start this for absolutely nothing? So guys, you are a CEO of your own business. You realize that. You get 1099 on this stuff. You own your business, so you need to invest into your business. I don't know how you're going to do it, but find a way because it's worth it. Okay? I've been through rough times, and we all have our stories, so no excuse. Make no excuse to get in this industry. Leads, weekly, is how you do it. I don't care if you're on your deathbed, you keep your lead flow coming in. If you're on vacation, you keep your lead flow in. Coma, keep it coming in. Do not stop your lead flow for 1 second, right? If you had a brick and mortar restaurant or bar or something, and let's say it's not on the greatest street in the world, and you had to market it, and you got this A-frame sign out front, people walking past and seeing that, free beer, free this, but now you need direct mail, you need certain newspapers, you got to keep the money coming in or you're dead. Your bills don't get paid. Your family suffers, all because you were threatened by leads. And if you're new to this industry or you've been in some companies that haven't taken care of you, you know that I'm here for you and the leads work. I'm proving that it works every single week. I'm not the manager that's not in the field, guys. I'm in the field every week proving it works, okay? And I'm also showing proof. So if you want to see the accounts, I'll show you the sales anyway that I do for actual visuals. And some people ask for it, and I give it to them, and I show them. Here's the 8 annuity sales I did in 2 weeks. I'll show you guys the $990,000 sale that I did. And remember, think about what this guy's doing. Remember that gentleman's only earning 3%. Why is that guy with the $990,000 only earning 3% when he thinks he's earning 6%? He thinks he's earning 6%. Now, here's the answer. His stockbroker takes 3%. That's a high number too, by the way. So at the end of the day, he's taking 3%. We're showing him illustrations at like 7.01% to 7.94% annually. And then we're showing him a look back period of if he was with the company for the past 10 years, even 20, that his money would have doubled every time. Think about this. Remember, this guy has a $100,000 tab he needs to pay, okay? And he wants to figure out how to get rid of it before he dies. So what I told him, they said, look, they're going to give you a bonus of $90,000. You owe $100,000. Here's your money, okay? That's it. In 1 year's time, you got that. In less than 1 year, you have paid that debt off, and you do not participate in the downsides of the market anymore. He said, oh, my God, very interesting. I had no idea that this was possible. Yes, it is, and a lot of them don't. The only thing you may run into is the fact that people love their stockbrokers. They've been with them forever, and this is the biggest thing that you're going to hurdle. The biggest hurdle that you run into is this, is the word change. And you need to tell them that. If they don't change with the times, they're going to hurt themselves and they're going to hurt their family. They're not going to have income for life. Now, some of the people with bigger numbers may, but why would you want to take a factor of a 30% loss possibility due to a very volatile market and lose all that money, 300 grand or so of your $1 million, you know? You don't want to do that. What leads? That was a typo, so, okay. What? Okay, I still don't understand what it means. What leads? So, you know, when you get into this business and you're new and you're kind of calculating, trusting people on what they say. I'm sorry for the sweat. I had to go outside, guys. But if this is how dedicated I am to this, and making sure that you are aware that I am doing this and I'm proving it can be done, and you can do this too. Now, on I have a new website coming out. It's going to pull this stuff apart. I've been working so hard to write this stuff, to write the material. It's almost like in book form, but this stuff is pulled apart so you can understand it. You can understand the language I'm using inside the home to get these big dollar signs out. Imagine you guys running into a $250,000 401k and being able to show them the illustration, move them into the sale, and transitioning this money. How do you transition money? You can do it. You can have them cash it out. Remember this, write it down. You can have them cash it out, get a check into their account, which is usually the quickest way, or you can do an exchange, or you can do a 1035 exchange, all deferred. Now, when they take money and they put it into their own account, remember this, they have 60 days before the taxation starts, so you've got to get that money somewhere within 60 days, all right? So which gets them amped up to put it into a different product. Any other questions? Does anybody have any more questions? I'm going to do one more thing here. I'm going to just go over this IUL thing real quickly here. An IUL is simply I don't want people that think they know IULs tearing this apart, but for new people to visualize what an IUL may be, if you take a whole life product, a strong one, and you think about that on steroids, that's what an IUL is to individuals that use it correctly, or reps that teach people to use it correctly. Okay, it's a very strong product for people. I use this, or I basically use this in my methods. But when I'm doing it for young people, I definitely teach them how to overfund it so they can deflect the cost of insurance later, and they can literally build a nest egg. Because most people today do not have 401ks, do not have pensions, and if they do, they're lucky. But think about this. When they retire at the rate that they're earning and the jobs they have and the income they have, $8, $10, $15, $20 an hour, they retire with $150,000 due to fees and market up and downs and things like that. That's $15,000 a year for the next 10 years. So what I'm telling you to tell people is this: they need to put something else aside, and so do you. So look into the indexed annuity for yourself and your family. And if you guys have any children, I'm telling you, if you really care about them, start investing into these products that we are offering to our clients and overfund the hell out of them, or max it out. You know, max, you gotta contact the carrier to find out how far you can go with this stuff. But you can't turn it into a mech, but it's not what you really want to do. So the other thing is the term. If I were you guys, I would concentrate on anywhere between if you run into people age 40 to age 55, I would definitely go with the ROP to make it simple on yourself. The other strategy is this: you sold them a term product, a term, you go to perm, you can go there next year and then sell them an IUL. So you got two sales in one. Just make sure you're not getting a charge back. So you can go and visit this client again and resell them on a whole life product or another better ROP product, maybe, or something that comes with better living benefits. Remember, Lawrence said it in this: living benefits are very powerful, man. You got to learn those living benefits, guys. You got to make sure that they understand this money isn't just about death. This is about living benefits too. So in your family tree, do people have cancer? Do they have heart attacks? Do they have strokes? Do they cannot do 2 of 6 daily activities like bathing, dressing, eating, toileting, transferring themselves around? Can they not do these things in your family? If you're going to run into that, Mr. Jones, this product will pay you while you're still alive too. Most products are about 95% of whatever the face amount is. So if it's $100,000 and they have a heart attack and there's proof of it, they get what, $95,000 by choice if they want. So this is a great, fabulous another strategy. Here's the last strategy I want to leave you with, unless you guys have questions. And I'll keep going all night, man. You keep me on. So I'll go all night. But listen to this. Here's a strong strategy: is if you understand these products and you understand the cash value portion, when you're selling even final expense, you need to inform them that it comes with cash value. It's growing their money in some portions. Usually it's 50-50. Like, let's say it's $100. $50 is going this way, $50 is going towards the face amount, $50 is going towards the 3% interest or more. Some products have 4.5% interest. Transamerica, Mutual of Omaha is here. They take $100, they get it. That goes into cash value. It earns annually. This annual income, think about this. This is what I'm going to leave you with, okay? Mr. Jones has a $100,000 policy on him. It's on him for Mrs. Jones. Mrs. Jones is here. Mrs. Jones. Now, if Mrs. Jones dies, let's say he's paying $200 a month on this, and you got $100 a month, that's $1,200, $12,000, $24,000. Let's say in 20 years there's $30,000 built up into cash value. He doesn't need this product for anybody else. You need to teach them this, is that he'll take the cash value out. All he'll do is Mrs. Jones passes away, he's going to take the cash value out. Mrs. Jones is always worth $100,000. So in some sense, it's protecting him from visualizing his money going up into the ether and being burned up and just wasted on this product. So if you can bring enough value and bring enough love towards Mrs. Jones, he loves her, he wants to protect her. You need to show him proof why he won't protect her financially, and then be able to tell him, look, Mr. Jones, what the hell do you care? In 20 years, if she dies, you're going to walk away with $30,000. You pay off the back end of the house that way, or put it towards the mortgage. You know what I mean? When explaining a GUO with living benefits, Do you think you can overwhelm the client with info? Curious your thoughts. No, I think if you do not, that you don't bring value. So that's a great, great, great question, because here's what that is. And this is for people that haven't gone through this with clients. This is what you're doing is you're saying, I don't want to overstep my boundaries and lose the sale. So what you want to know is this, is that you need to overstep those boundaries and go all the way in, all the way. Listen, guys, imagine you being sold a product and then you find out it has living benefits. So, you know, I hope I'm getting this right, Faith. So if I teach my clients about living benefits, cash value, death benefit, and all of these opportunities that this brings, what is the word I teach you guys? It's value. You must bring value to the table to sell these products, okay? So you have living benefits. Well, how does that work? The problem that you may be running into is how to explain the living benefits and how they work. So what I'd like you all to do is go to the carriers and learn about your living benefits. Once you understand how the living benefits work, you'll feel more comfortable offering them up. Hey, this Cadillac comes with a leather interior. This comes with a CD player, stereo, 12-stack CD disc changer, a woofer. That's how cars are sold. So why wouldn't you sell your product that way? So you must sell it with all benefits. Hi, Jason, this is Rose from Palm Beach. Hey, Rose, how you doing, buddy? So you have to bring the living benefits, and here's how you would do that. You want to start into the sale. Usually, you're trying to find the right premium. I taught you something that's valuable. It is the end result of all of this is how much money are they working with? Okay, what do they got to pay for this damn thing? So, Mr. and Mrs. Jones, you got your play money, you've paid all your bills. You have, some people have $5,000 a month left over, $10,000 a month left over, but the majority of people have $500 left over a month. I want you to remember what to say. So, you paid all your bills, you've had your fund money. So if I told you paid all your bills, you had your fund money, and you had to live on $300 of extra capital that you can put in your bank account, you can have fun with, could you do that? And the answer is going to be yes every time. What you've just done is proven that they can afford a $200 a month policy, okay? Now, we understand this. Okay, now you get this. You taught them that they can afford it now. That's important for them to get that out of the way. They can afford it now, remember that. Now, let's build value to this side. I want you to be aware, man, this is unbelievable, because this $100,000 product that you have not only earns 8% interest or 3% interest, whatever the hell it may be. On a GUL, it's 3%. 3% interest annually on the cash value, but it also comes with living benefits. So what that means, Mr. Jones, is if, hypothetically, does your family have cancer, stroke, heart attack in your family tree? Do people pass away due to that, or they just get it? Because here's the bottom line. Living benefits don't mean they have to die, guys. They can stay alive for these living benefits to go into effect. And that's the gold mine. You're sitting on a lottery ticket. Mr. and Mrs. Jones, do you understand? One way, somehow, some way, the amount of money that you put into this won't be anywhere compared to what you will get out of it, okay? It's meant to outpay and outweigh what you put into it. So you put 30 grand into it over the next 30 years. It earned you $70,000 plus saved your 30 grand and earned it 3% interest. So why would you not do that? It's an investment. Go to sleep at night knowing that you can protect your wife from the worst day of her life and not being able to pay the mortgage due to the fact she needs to sell the home, or she has to pay the back end of the home off. Back end of the house is what's left on the home in a 20-year, 10-year, 30-year period. The living benefits are a portion, Faith, that are very, very, very vital to your sales. So I want you to push the mortgage protection to a new level in your sales by bringing value and bringing the living benefits to the table, along with teaching them what the cash value does. And if you treat every product like it's one product for two people, one product for two people, one product for two people, the cash value will become whoever's the life of, not the beneficiary, the opposite of the beneficiary. Could be the owner of the policy, whoever's paying on it. But it's the cash value. The living benefits are for both of them. The living benefits, or if Mrs. Jones is dead, you still have this policy in place. You had cancer. I sold one of these a couple weeks ago just on the fact that this guy's family has cancer all the way through it. And he said, I get $250 if I get cancer and a certain internal cancer this way. And now we made sure, we called the carrier, said, what does he have to do to get the cancer? And it works. I've seen people get the cancer and have to, get these particular policies. It's fantastic to watch people have that extra money. They also, you can bring to the table that that their health insurance may not pay for everything. They may be seriously ill and not have enough money coming in, especially if they're working. So it's very important that you do that. One product's for two people. Got it. Hey, Faith, that's great that you got that one. See, that's cool. That I hear that somebody's getting it, man. That helps me know that you guys are getting it, and it's good for me to hear about. Thank you. So what else do we have? On the end, final expense, very simple process. I tell you, for me, the direct mail lead is a great one. I have a direct mail lead system that is fantastic. They remember filling it out. It's fabulous. I'm not opposed to the tele leads either. And just keep the leads rolling in, guys. Mix them up. Try this, try that. Just mix them up. Keep the lead flow coming in. Diversify your marketing. Okay, babe, I'll be in a minute. So the final expense market is fantastic. It's a $1 billion market. Let's keep rolling with it. The mortgage protection is a fantastic market. If you don't understand it, keep coming to these videos, keep asking questions. Get with me. Start in business with me. Get in business with me. And it doesn't mean you have to get in my downline, but get into business with me. Start asking questions to me. Understand the business from a sales point of view. And then we can start showing that you're valuable to people that you hire. If you don't have social proof and you're not proving numbers, who the hell wants to be with you? And let me tell you another thing, that a lot of you guys are going for these high comp levels. I need you to understand that I could have 140% comp level and do $3,000 a week on the worst lead system, no training, bad recruiting schedules, terrible uplines resources, no communication. Or I could get into a system where the communication is there every day. The resources behind the scenes are unbelievable. The events, the training, every day there's training. Every single day there's training. We have got a new system put together where there's every single day there's training. So I want you guys to understand the training is valuable. How can you get into a business that you don't understand and not want to train? So for those of you that are really making excuses and failing, and you're not on the training, and you're not on the calls, you think that you can surpass that and call me and say, I don't know what to do, I don't know what to do. Well, you got to start by learning the products, you got to start by learning the processes in the home, and you got to get your lead resources coming in. And I know you guys are scared, but please get past the fear. I'm here for it, I promise you. We'll get through this together. So, you got $3,000 at 140% comp level, or you can have a $10,000 week at 100% contract level. Which one would you choose? Well, I'm not saying that's how it is, but I'm going for this. I would do that. That's smart money, okay? Why? Because this system works better. This system trains you. This system has back offices that you need. This system has sales training calls. This system has the lead programs that are unlike anybody else's, and it listens to your needs. So you have to be opportunists, and you guys seeking out those higher comp levels is just going to be a failure, disaster. You're always going to be looking for high comp levels. You're never going to be looking for the platform that can build you an organization. There's a difference. If you want to be a salesman, go after the high comp levels, but you better be training yourself. You better be ready to train yourself. Thank you, Faith, for agreeing with that. So remember, I have taken comp level hits to get things out of my hierarchy. Oh, you're going to give me a back off? You're going to send me five new recruits a week? I'll take a 20% hit. If you're going to send me 10 new recruits a week, fine with me. I'll put them at 100% contract level. I'll take the hit. And that's where I really grew the business, was doing it that way. I took a shot. I said, what the hell am I going to do? I earn big money anyway, either if I'm at 140, 120, 130, 110, it doesn't matter. I'm still going to earn about $10,000, $20,000 a week. So when you reassure yourself that you're good at this and stop questioning, the comp level, everybody's going after a comp level, but they don't know what they're doing. So it doesn't make sense to chase something down. It doesn't work. Go after the stuff that works. Go after the right platform. Don't go after the comp level, go after the right platform, okay? That you can build an organization from. Because what one of you wants to be in the field forever? Do you want to be in the field forever? Do you want to be the guy that's driving the Mercedes-Benz and the Lamborghinis that you see on these videos and things like that? Now, maybe you'll spend your money smarter than most of these guys, but maybe you won't. Have fun. What the hell? They earned it. I don't care. I'll probably get a guinea myself one day, you know? So I'll be one of them guys. But you know what's fun about this is that I know that. I actually know that I'll be there. You know what I mean? And I kind of am there in a way. I just don't have a Lamborghini yet. And I don't have the biggest house that I want. But other than that, that's materialistic things. Imagine waking up and feeling good about your business and knowing that the growth factor was there and that you had the opportunity to grow because somebody's giving you things. For once in your life, somebody's in an organization that's actually providing you with the right resources that you need. You know what I'm saying? Yeah, I do too, Faith. Jet traveling, set, you know, is that first class, Faith, or not? So what else can we do here real quickly? Let's integrate real quickly recruiting. If you get with an organization like mine, you're going to get recruits, okay? You're going to get, how about this? You're going to get recruits that actually have a lead order in. You're not just going to get a recruit. You're going to get a recruit that has a lead order in. How about them apples? Now, when you become the supervising agent that I think you deserve that situation, because remember, you got to prove something, man. You got to make sure that when they ask you questions that you're able to do what I'm doing here. Maybe not to this capacity, but just make sure you know our product smart, and you know the in-home sales process, and you know this phone scripts. If you're able to take somebody out and teach them and actually sell deals in front of them, that's fantastic. But there are many steps to this process of building an agency, selling, learning products. So you got to be tough-minded, man. You really do. And a lot of you are. It's just that I don't think you're taking advantage of yourself and going the full distance on what God has blessed you with. If you were behind enemy lines and you had to get out, and you were being shot at and running through the fields, and you knew that 50 miles away was the line of safety, you would run your ass off. You would work your tail off to survive. And you're not doing that yet because you don't believe in the end result. The guys at the top understood that the end result was millions of dollars. They knew that they would get there, and they understood. They may have not understood how to get there, but they just took a leap of faith. They kept going. You know what I mean? They didn't give a shit. They just enjoyed coming in. They knew they were going to be able to go out in the field, make big money, and they knew that others could do the same. So that's it, guys. Any questions? Thank you all for being here tonight. I really appreciate it. I had to do this on Friday night because I can't do it on a Saturday morning. I'm taking my Harley motorcycle license exam, and but I will stay on here. If there's any more questions, I'll give it a second while I'm cleaning up a little bit, and I'll answer any questions that you guys may have. In the meantime, if you want to get involved, you guys know you text join to my organization, and I will get you involved in my trainings every day of the week, and we will talk about your compensations and getting you the best lead resources out that I know of today. So there's a couple created. Thank you all for being here. Like I said, you can text join to that, and that's it for tonight, guys. Thank you, and if you would please do me a favor, if you can like this and say something nice about it, and maybe share it with your friends and coworkers, it'd be helpful for them. They probably need the help anyway, guys. So I'll see you guys next week sometime, and we'll do it again, and we'll go over and review some of the other things. If you guys have anything that you want me to talk about, just send me a message. If you're having a rough time with something in the field or in your career, send me a message on what it is, and we'll review it, and we'll go over how you should do the job the way I would teach you how to do it, okay? I love you guys. Thank you for being here. Thank you very much, okay? Have a good evening.